G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now the DAX has hit this resistance and we may see a decline. We're also seeing a bit of a divergence there. So also the Nikkei is still consolidating in this range. It's frustratingly consolidating. We want to see a breakout obviously to the upside, but possibly even to the downside if that's your preference as a shorter. Now before we go any further, make sure you hit that like and subscribe button. Looking at the outlook for both, the German DAX is approaching the 23,000 point mark, driven by improved economic sentiment and an anticipation of conservative-led government post-election, which may implement corporate tax cuts and increase spending. However, concerns arise due to significant manufacturing job losses and high energy costs potentially signalling industrial decline. For the Nikkei, is trading around 39,200, supported by better than expected economic growth of 0.7% in quarter 4 2024. Despite this, the index faces resistance near 40,000 points, with a midterm outlook remaining range bound between 38,100 and 40,000. Earnings growth is expected in the high single digits for 2025, though a slowdown in the manufacturing sector could pose risks. So first looking at the trends, long-term trends, we've got the monthly, the weekly and the daily. And on the monthly, you can see the CCI is still very bullish above the moving averages. That's giving us a strong bullish signal, and likewise you can see there the price is also above its respective moving averages. We did have a bit of a dip back here, and that's where it fell into that CCI range, and you would have been wise to avoid going long during that period on the smaller time frames if you're trading on the smaller time frames. On the weekly, we've got a couple of divergences that have played out here, very long term. We did see this bearish divergence, this first range here. Lower highs on the CCI versus slightly higher highs on the price, and that pulled back and bounced out of our target range. And that target range is measured by a Fibonacci retracement back to that low. So that bounced out of that perfectly, that 23-38% Fibonacci range. And since then we did project another bearish divergence back here before our last video. Now notice there that's actually risen. So now invalidate, it's actually a rising CCI versus a rising price as well. So we're going to invalidate that, and we're going to drop that and delete that trend line because there's no longer a bearish divergence on the weekly. And we're going to actually remove that one there. That would have gone back to, readjust that back to there. Now on the daily, if I zoom into that, again we had a bearish divergence back there projected. We're going to, because that's actually risen now, and we're going to delete that. So that is invalidated, and that doesn't exist either. However, if you look closely, you'll notice there we've got almost a double top on the CCI versus the same range, higher highs on the price. So that's a bearish divergence. Now that's hit this resistance we've drawn up there. It's a new resistance at 22,881. So we might see a bit of a pullback there if this CCI starts to drop. Of course, the price could still rise. As long as the CCI drops, that's going to be a bearish divergence. So early days yet, I'm not going to draw a target area. I want to see this starting to drop if it does drop before we start drawing any targets. Back here we did have a bearish divergence. You can see there, hit our target, had another one back there, and even a small one here, and that could have been, it was a slightly higher high. Let me see if that eventuated. If I drew a Fibonacci between that high and that low, you can see there it penetrated that 23-38% level. So we do pay attention to these divergences, and there's another one, as I said, on the daily at that point there. Now if we go to the intraday chart, you can see here since our last update, it's actually risen since then, and this is the daily chart, so we only go in the direction of the daily, so we only take long trades. Now back here we did have on the 1 hour, this is the 1 hour time frame, we did have a bearish divergence. We had a bearish divergence here, lower lows on the price, that actually pulled back, hit our target. We had a secondary divergence which we drew there versus a double top on the price. Now this one failed, so I'm going to remove that. That didn't work. And since then the price has continued to rise, and what we have now is another bearish divergence in play, and that's in the same range, going up to that point there. You can see there it's hit that resistance and bouncing off it a few times. The CCI is dropping on the 1 hour time frame, giving us a bearish signal, so we might see a bit of a pullback at this point. We can't tell how far it's going to go. At the very least, if it does start pulling back, hitting this divergence range, at the very least we're going to take it back to that low. You could argue that's already hit it there, or else it could actually go lower to that point. So it's already hit that first range if we drew the Fibonacci back to that level, but to more significant low at that level, that would be the next area of a retrace if we were to expect a retrace. So I would like to see this, if that first range was hit, then I'd like to see the CCI adjust and move higher to continue, in which case that first divergence would have worked, and since then the divergence has now continued in line with the price. But at the moment the CCI is still dropping, which indicates we might see further decline. So just be wary of that. Of course the price can still rise, but at the moment I like to see this break higher to be more confident of going long, in which case I also like to see the CCI break higher as well to invalidate or to continue on from that previous divergence. Now the Japanese Nikkei has on the monthly broken into a downtrend on the CCI, and that's showing by this sideways movement on the price chart. So it's not really bearish yet on the price necessarily, but the CCI is giving us a bearish signal on the monthly, so just be cautious of that. This divergence, there was a bearish divergence back here. Let me zoom in on the monthly for a moment. We had a lower highs on the CCI versus higher highs on the price, and you can see there that wick of that candle during that month dropped off quite strongly. And if we draw a Fibonacci between that high and let's take it back to that low, you can see there it broke very easily into that 23-38% level. In fact, it went as low as at 61%. So we always pay attention to these divergences, but at the moment, notice on the monthly it's still bearish, and we may see further declines possibly. Now for this to invalidate, I'd like to see the price rise, and also I'd like to see the CCI rise above those moving averages to be more bullish, but not looking bullish to me. It looks more bearish than anything else. On the weekly, we've got a few divergences here as well. The latest one by these lower highs on the CCI versus higher highs on the price, that's already dropped and hit our target as well on the weekly. And notice as well, even though the price is moving sideways, the CCI is also giving us a bearish outlook. So not looking too positive on the weekly neither. Again, I'd like to see this invalidate by with the CCI continuing higher along with the price to be more confident of a bullish move. And by then, at that stage, you'll see the monthly as well move higher. Now on the daily, it's been stuck in this range, this minor support at 37,265 and a resistance at 46,20. You can see there since started around October last year, and it's still in that range, and it's been very stubborn. No real movement. So again, consolidation at the moment. It's giving us a bullish signal on a daily, but it looks like it's going to break down into that moving average range on the CCI, but also on the price, and we might see further declines in the short term. And again, I'd like to see this break out to be more confident about going long or short before we get excited about either of those. On the intraday chart, this is the 1 hour chart. I've got the daily here as a reference. You can actually trade this consolidation, if you like, on the smaller time frames. So you can see here there are a few opportunities back here going long during that period. You would have been going long, and short likewise when you're in the shorting areas down there. On the divergence, we did have a bullish divergence here, higher lows on the CCI versus lower lows on the price. That bounce hit our target easily, and that almost went as high as the 100% retrace level if you drew a Fibonacci range. At the moment, the CCI is moving in line with the price, so there's no divergence to talk of. So those peaks are lower, and those lows are higher as well, and those lows are higher as well. So no divergence really to talk about there. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.